Hi, Mark Anderson here, mortgage banker, Paramount Bank, continuing my daily series monitoring the interest rate environment, keep people informed about how rates are changing and what the forces are behind the scenes that are causing them to change. What we've seen over the past couple days is that rates got a fair amount worse from where they were at last week. I am starting to see some signs today that maybe we could be in for a correction back toward at least slightly lower rates than what we're seeing right now. I don't have any indication at the moment that we're going to see pricing quite as good as it was last week, but we are seeing some positive signs literally just within the past few minutes. So basically, without getting overly technical or in over my head and my ability to interpret some of this stuff, the New York Fed just came out and announced that they are doing another intervention in the markets where they are buying up some elements of the market to try to boost liquidity in that. And that's going to help us on the mortgage bond side. Now, again, as I've said, the Fed by itself does not control mortgage rates. They can influence the rates in various ways, but when they do a Fed rate cut, they are cutting rates that are actually totally separate from the rates that we see in the mortgage market. So what I'm looking at over here is a live chart of mortgage bond prices. The concept here to understand is that as mortgage bond prices go up, the rates generally, there's a big asterisk there, generally come down as those prices increase. This chart right here shows you, or this graph rather, shows you the price of the mortgage bonds over the past day of activity. And so what we see here is they went down really low at about noon, and then after this New York Fed announcement, they shot up. Now, to give you some context on what that means, so this should be a good thing. It should be a good thing for mortgage rates. To put this jump today in context, though, I'm going to blow up this chart out to go over the past month. So what you see here is the best rates that we got were here at about, let's see, this is Friday, March the 6th. That's when the bond prices were the highest. The rates themselves actually got to their lowest point by about the 4th. And you'll notice that there's not a perfect correlation here. Bond prices were actually higher on the 6th. Pricing was actually better on the 4th. But generally speaking, there's going to be a direct relationship here. You see this big drop over here. This is when the rates got worse. With that big dip. And so today we're coming up better, but we're not quite at the level that we were at when the most favorable pricing was around. Now, as I've mentioned in the past few videos, mortgage bond prices are not the only thing that impact mortgage rates. You also have the phenomenon of capacity and lenders' capacity to take these lock orders on. The level of refinance activity, lock activity last week was so unprecedented that what we saw was a phenomenon where even when the bond prices continued to go up, the rates didn't really come down to match that market movement. And really, it was because these lenders were full. There were some capacity issues, and there was also just a sentiment of, at some point in time, there's diminishing returns for continuing to reduce rates in terms of how that would benefit these large institutional mortgage lenders. So long story short, I'm seeing some positive signs here. If you are in a do I lock or do I float, do I wait this out for another opportunity, I would actually advise today that we're seeing some signs of life in this mortgage interest rate environment. Pricing may get better over the next day or two. This could rapidly change. I don't want this to come across as a firm prediction that we're going to see price improvements over the next day or two. But it certainly seems like, based on the data that I'm seeing here, it is certainly, I would say, probable that we will see some price improvements over the next couple days. That said, I mentioned this yesterday as well. If you are fairly certain that you are going to benefit from refinancing, if you've got a rate with a 4 in front of it, I think you need to really, really strongly consider lining up your refinance option. And if you want to hold out for better pricing, there is still a massive upside to getting your process started. So I took 2 loan applications yesterday for clients that did not want to lock in. But what they wanted to do was to put themselves in a position where, as soon as I see the level of improvement that they want, they're in a position where I can just basically click the button, get them locked in. Given that they've got rates that are in the 4s, it's going to make sense for them to refinance even if we have the rates that we have today. But by getting your application in the door, by starting to supply your supporting documents, you're going to put yourself in a better position to take advantage of the potential improvements in rates by getting that process out of the way. One quick thing, there is an element of human logistics associated with locking in a mortgage rate. There were folks I talked to, say on Friday and on Monday. So this past Monday, this past Friday. I would give them a quote, let's say it was 1 p.m. And I take all their application information, I load that all into the system, I pull their credit report, I do the initial due diligence that I need to do before registering a lock. And by the time I submitted the lock, the pricing had changed because we were seeing just a rapid change in the mortgage rate environment. It happens in real time. And so, unfortunately, I had to make a couple uncomfortable phone calls where I said, look, I'm ready to click the button on this. But in the time it took me to put all this together, pricing went against us a little bit. Now, it wasn't a huge change, and we ended up working it out. But there is so much volatility that you really, to optimize your chances of saving the most amount of money, you really want to put yourself in the best position for the shortest amount of time between the time you get the quote and the time that that's locked in. And so instead of waiting, say, an hour for me to load an application, for me to do that upfront due diligence before I'm able to click the button, let's get that out of the way. So I am happy to talk to you about your refinance scenario. I'll give you some very transparent pricing information. We'll identify what your savings are, both short-term and long-term. I'll put together a detailed proposal for you. You can reach me, call, or text 314-599-0511. Thank you.